Coming up in this episode, one area of the ETF market that investors may be missing. Also coming up, we'll take a look at the broad ETF markets. And I've also got a special invitation for all of you for a live event coming up later this month. So let's get right to it, beginning with a broad market look at the major asset classes and the ETFs tracking them. Now, this is a year-to-date chart. That means it's since the start of 2026 through the market close of July 10th. And so we've got 2026 halfway over. And as you can see here, a couple of major trends have continued to unfold, with commodities continuing to lead up about 24%. SDCI is the ETF that we feature here. By the way, that ETF, SDCI, is a great core holding for those of you that don't have exposure to commodities or are maybe underrepresented to that area. Check out SDCI from USCF Investments. We've talked about that ETF many times on the program. But some of these other areas, Bitcoin down in bear market territory, still looking for a bottom. We'll talk about Bitcoin a little bit later. I've got a chart with gold and Bitcoin. Just want to give you an update in that regard. And then some of these other areas, global real estate making some noise, ahead by almost 13% since the start of the year, REET. Bonds are pretty much flat, and then stocks, as measured by the S&P 500, up just over 11%. So let's take a look now. We've got the stock market still trading near all-time highs. And this was a chart that was published by Bloomberg, taking a look at what percentage of U.S. household net worth is represented in the various asset classes. And as you can see here, equities or stocks now surpass real estate. And so this run that we've had in stocks, you can see in previous eras, we've had stocks and real estate kind of go back and forth in terms of leadership. But right now, stocks as a percentage of U.S. household net worth are the leader. And this I highlight from a couple of perspectives. Number one, we should celebrate capitalism, yes. But at the same time, I think a lot of investors have been swept up in the bull market, and they don't understand the risk. They don't understand how to protect wealth. And so the idea here is not just to build a portfolio, which most of you I presumably are doing that watch this channel. You're trying to grow that portfolio, which is fine. But then there's the element of protecting your wealth, which too many of you are sloppy at or not doing properly, or don't really have a robust framework for protecting wealth. And so this is one of the reasons that I've focused much of my career in research in this area of helping you not just to build a portfolio and grow it, but really to protect. And I've got an event coming up on July 23rd. You're all invited to come. It's a 3-step framework. We've seen it, and I've talked about it extensively on the channel. Building a portfolio that has these 3 elements, the core, non-core, and then the safety. We're going to focus on safety. And you can go to etfguide.com/safety to register. It is free, and it is live. It's on July 23rd. Mark it on your calendar. Live attendees will also be getting 2 bonus, I don't want to call them reports, but tools. You're going to get my checklist for de-risking your investment portfolio, and you're also going to get a blueprint for building a robust, architecturally sound investment portfolio, or what I call portfolio construction. So again, mark it on your calendars, July 23rd, etfguide.com/safety. So speaking of safety, this is an area of the market that has confounded many. The performance of gold, the performance of Bitcoin, the performance of long-term U.S. Treasuries, which are often sold as safe havens, right? These are the safe haven assets. These are the place where you're going to get your capital protected. And they haven't been safe havens. If you look at the performance, they've actually lost money. Now, again, this is not a knock on gold. This is not a knock on Bitcoin. This is not a knock on long-term U.S. Treasuries. This is not an anti any of that message. That's not the point. The point is if you're going to use these assets correctly to protect your capital, well, you're not going to do it in the safety bucket of your portfolio or the safety container. these types of assets belong in only one place. That's in your non-core portfolio, right? Because the non-core portfolio is a place where you're going to have fluctuations. You're going to have the potential for market loss. Well, you also have the potential for market gain. But in the safety bucket, there is no potential for loss. And so that's why you would never use in your safety bucket any of these assets. You would never use so-called safety havens like gold or like Bitcoin or like treasuries inside your safety bucket. So again, it's all about context. And this is not an anti-gold or anti-Bitcoin or anti-treasury message. It's just understanding the proper context for building a smartly well-constructed portfolio that can endure the worst of markets and enjoy the best of markets. Sector-wise, S&P 500, you've got 9 sectors up, 2 down. There's nothing that's bearish about this picture in terms of market performance, in terms of trends. The leaders, technology, energy, and industrials, and then the laggards you see are consumer discretionary as well as communication services. Both of those sectors in red that are negative are down modestly. So we see no evidence of any bear market performance in S&P 500 sectors thus far in 2026. One of the areas within, you could say, the technology group, a sliver of that, is semiconductors, which have been stalwart performers. This is a look at Saxo, one of the biggest and most popular and heavily traded semiconductor ETFs on the planet. It aims for 3x daily bullish exposure. This ETF is still up 357% since the start of the year. Granted, it was up double that amount earlier in the year. You can see that semiconductors have come down from their highs, but nevertheless, there's been lots of great trading opportunities for those of you that have been trading this, or maybe you've held it. Either way, you trading it when it's down, and playing those rebounds has been, if you've been picking it right, a good way to play it. So check out Saxo. And of course, you've got some of those single stock ETFs in the semiconductor space. I haven't charted any of them here, but we've talked about them often on the program. Direction, of course, leads that charge in terms of single stock ETFs on companies like Micron, as well as NVIDIA and the many others. In terms of an area of the market that I think is maybe underappreciated, and I don't want to say it's out of favor, because if you look at the one-year chart, uranium miners are still up, and so are juniors, which is URNJ. That's for the small cap uranium miners, but both of these ETFs on a one-year basis are still up. They're ahead by 26% and change, by 30% and change to the upside over the past year. That's a pretty good one-year performance record. But you'll notice that they've come down. They've come down here over the past, let's say, really since early first quarter, when they kind of peaked. And since then, it's been down, down, down for uranium miners. And so what's going on? Well, first of all, I think it's an interesting setup, because the dynamic of uranium, which fuels nuclear power, that hasn't changed. And it's sort of a paradox. The fundamentals are bullish, but the actual performance of miners in the short run has been negative, at least on a year-to-date basis. And so these are some of the things that some of the dynamics in that market of what's going on. You've got a structural deficit that's widening. You've got secondary supplies drawn down, tightening the market. You've also got this confluence of AI-driven power demand and SMR build-out. That's small modular reactors, SMR. So that's boosting the long-term outlook for uranium. So if you're focused just on the short term, I think you're maybe missing the bigger picture. And so those of you that missed the first run on uranium, take a look at URNM and URNJ as a way to participate. And again, have a much wider view. Don't be so narrow in your outlook. Markets sometimes can be that way, very short term, very gidgety, and sometimes they miss the bigger picture. And that's the opportunity for you as an investor, all of us, to take advantage of those things that sometimes happen, those anomalies. So in terms of the Bloomberg Billionaire Index, I like to highlight this to remind us where the big money's invested, how the big money became the big money, and how it's allocated. And you can see where is the net worth of the top 10 billionaires located in which industry sector. It's technology. 8 out of the top 10 made their fortunes there, and that's not going to change. And so from an investor's perspective, orientating and aligning your portfolio with technological trends and revolutions, that's where you're going to make your money. And so again, it's building a portfolio, growing that portfolio, and also protecting it. That's the key. Check out our latest episodes. We just dropped First Look ETF with the New York Stock Exchange, our July episode. And then we also have a new Metals in Motion episode, which dropped earlier this past week, which takes a kind of a look at the first half of 2026 and some of the things that happened, as well as some of the surprises. And then looking ahead for the rest of the year, some of the things that you should be aware of in this particular space as it begins to develop and unfold. And so check out those 2 episodes, Metal in Motion and then First Look ETF. And of course, as a reminder, you can watch ETF Guide TV everywhere. We're not just here on YouTube, but along with Apple TV and Roku. And also we stream our original series programs on Spotify as well as Apple iTunes. Hit me up in the comment section below. Let me know how you're doing. And again, I'll see you for our next episode. We've also got some episodes of ETF Battles, which will be dropping this upcoming week. So be sure to tune in for that. And again, as a reminder, join me on July 23rd, ETF.com/safety for my live webinar on how to de-risk your investment portfolio before the next downturn. I'm Ron DeLegge. Thanks for watching. We'll see you on the next episode.